Welcome back to Halftime Report on CNBC TV 18. We have a very special guest joining us now. Ramdeo Agrawal, the chairman and co-founder at Motilal Oswal Financial Services, is joining in from the sidelines of the Motilal Oswal 18th Annual Global Investor Conference. Ramdeo, good afternoon and thanks for being with us. I can see the frenetic activity behind you, and it's a very I think it just showcases the kind of euphoria that this market is in right now. The Nifty is up, 2% this year, while most global peers are down about 18-20%. Is this enthusiasm something that perhaps could continue through the course of the year? And what has the feedback been so far from the conference?
Good afternoon. After 2 years, we are doing this conference in physical form. So everybody is very excited. And a lot of people have come from Hong Kong, Singapore. Not so much of participation from US and London this time, but participation is very intense. And one of the things I'm hearing is that India's story is different. What you are saying about outperformance, that everybody is noticing, and everybody is trying to find macro backdrop for this outperformance and how it is going to happen. So I think everybody is excited, and when we meet the companies, we just met Mahindra's, and we are just seeing a few more banks presentation and all. Everybody seems to be excited about what's happening on the ground. Demand situation is good. In fact, if anything, they are not able to meet the demand. So I think many more companies, there are 200 companies participating with about 12,000 meetings. So I think it's going to be a big day, a big 2 days tomorrow. And let's see, what is the feedback from them.
Right. Ramdeo, hi, welcome to the show. You were talking about the outperformance that India is seeing, but at the same time, the world is expecting a recession probably in the second half of this year globally. In that context, how would you be placed probably on the IT space? What are investors' concerns when it comes to IT? Do you think that would probably be a contra investment at this point?
Yeah, so IT has become the second largest market cap category in terms of corporate profits, the aggregate corporate profit pool after banks. The second largest is IT. What used to be about a percentage in 2000, now it's about 23-24%. So you can't take away the size of the profits and the quality of the profits. There is hardly any company in the tech which is loss making. Every company is profit making. So India has right to win, and it's going to be a big story in the years ahead. But what has happened is that on the eve of COVID and during COVID, the stocks got re-rated big time, and right now we are seeing the churn. The private banks are on the rise. So to buy that, from where will the money come? So clearly there is a churn here, and I think I don't know when the correction will be over, but at some point of time in next 6 months or so, as the correction gets over, I think it is going to throw one of the biggest opportunity to invest as we go forward. But maybe some more corrections are ahead, because this fear of recession is becoming louder, and at some point of time maybe some actual recession will come, and at that point of time I think psychologically IT companies will be impacted most, because the tech companies in US will have the largest impact. So I think we are in a very interesting situation of this large industry group. The corporate performance will be good, but the P multiples derating is happening continuously and may continue for some more time.
Right, take that point, Ramdev. P derating of IT may continue even as the sector does well. But I remember clearly, you said that the FIs were getting, when they were selling lock, stock and barrel, you said that they were getting an easy exit from our market, but the entry back will not be easy. We've seen that in August, FIs bought over 20,000 crores and the Nifty has rallied from about 15,200 all the way to upwards of, or just shy of that 17,500 mark as we speak, a little around 17,700. What are your thoughts on the flows coming into India from the FIs now that everyone is looking at India as the only place of outperformance in the world?
Yeah, so see, today India is about 3.5% of the world in terms of market cap. We are about about $100 trillion global market cap. We are about 3.5%. And in next 3, 4, 5 years, we are very, I mean, the way the world is today, I think India's gain in market cap share is going to be quite rapid. So we are heading towards, in next decade at least, to about 5% of the global market cap. I believe the institutional investors have allocated about less than 1% of their corpus into India. Now, the question with them is that they are finding India expensive. But that's how India is a unique story. It has its own momentum in terms of what is happening right now. You cannot price every country same. These two countries, like two companies are different like that, two countries are different. So at some point of time, they'll come to realize that India has its own unique story, its own size, its own momentum. So then I hope they'll get reconciled and India gets its a fair allocation from FIs in the years to come. So I remain positive, optimistic that maybe with a little gap, FIs will definitely stop selling, but they might, as the earnings momentum is maintained, I think they would come to buy here and build the position of their portfolio.
Okay, you briefly mentioned that you have over 200 companies, I think, attending the conference, and I think Dr. Anish Shah of M&M just spoke a while back. What was the key takeaway? That is one stock that has been on a tear. Anything that stood out for you?
Yeah, I mean, I attended the entire presentation. So the company is very in a determined way. They are cleaning up all the portfolios of the legacy businesses and building up on the EV cycle. So it looks very exciting, and the current CEO is completely on top of it. So it's I mean, they're not able to produce enough to meet the market demand. This is what the market looks for. 25, 30, 40% growth, at least in next 4, 5 quarters. So that's what I think. There is a growth bonanza here, and I think market will remain. I would think at 18, 19 P multiple. I think it looks a good stock, good story to pursue for next 2, 3 years.
Okay, that's on autos, Ramdeo. But the other big theme that people can't stop discussing now is cement. I mean, if we were discussing this in 2020, 2021, we wouldn't really be discussing as much consolidation, which could be, coming up in the cement space. What are people talking about in cement now? Would they buy it as simply because of the capex cycle picking up, or the fact that there could be, buyers coming through for smaller cement companies? What's the theme there?
Yeah, I think the biggest change which has happened in last few months is the entry of Adani into the cement, and their ambitious plans about it. They would be having better understanding of the kind of a demand profile which is going to build up in the economy. And I think one lever, where the GST of 28% for the one of the most primary industrial commodity. Earlier also it was being discussed that it could come down to 18%, but for revenue considerations it never happened. So that could be one more trigger. But I think the demand scenario which will build up over the period of time, and the kind of consolidation they are talking about, that makes it very interesting. One number I was saying was China last year consumed about 2 billion tons of cement. We are still at about 300-400 million tons. So I think the scope for this industry to grow and generate a lot of cash in the years ahead is there. Now the issue is the kind of change this industry is seeing in terms of the imagination that the kind of multiples this can attract has been quite astonishing.
Right. Ramdev, if one's thesis is that India will outperform going forward, both as a market and as a GDP, and assuming that, more than 70% of our GDP continues to be consumption driven, how do you play that space? I mean, at what pace do you think, what segments of the consumer, assets in the stock market will grow, and what would your positioning there be?
Yeah, so, services altogether have been very large part of Indian economy, and that's where I think we have an edge, global edge we have, right to win we have. So I have been big fan of IT also. I'm an Indian IT. I still remain so. your financial services, your banks, asset management companies, your brokerage companies, your insurance companies, general as well as life. So everywhere the growth potential is very high. And as the aspiration to become developed economy, as propounded by our finance minister, takes momentum, I think the outlook for a lot of industries which are connected with the economic growth, they will also perk up, and the opportunities will come. Opportunities will come in, say, automotive. Opportunities will come in a lot of other consumer services like real estate. That has been in the dumps for last 12 years, and there I think the demand has been very robust across the country, except for very expensive flats. I believe up to 5 crores, 10 crore flats, the demands have been very good. So I think you have to, first thing is to remain invested in equities. Second is to find stock ideas or bargains at any given point of time. India is full of bargains, full of ideas, in the sense that we have 2,000-3,000 companies listed. For everything you will find an idea. So there is no dearth of ideas if you have belief that India can keep growing at 7% for next 3-4 years.
Oh, absolutely. And the market is listening to you, Ramdeo. The Sensex is up about 300 points right now. But the other big corporate that's speaking at your conference, and I'm very keen to know the takeaways, is Adani Transmission. There is so much opportunity here as well, right? I mean, Adani Transmission in their own PPT, in their presentation, said that there is $30 billion worth of projects for private players to capitalize on. What do you see as the big story here? Because some of these stocks have rallied quite a bit already.
Yeah, so I think that presentation is in the afternoon post-lunch. So everybody is looking forward to that Mr. Saldana's presentation. Let's see what comes out. I'm also as keen to see the presentation. So it's one of the observation about the industry is that it's a return capped kind of industry at about 12% or so. So we have to figure out how exactly they are going to deploy a lot of capital so that the growth is being this growth hungry market. They are not focusing so much on the ROE, they are focusing on the growth itself. So I think we have to listen to them to figure out what kind of capital injection they can do in next decade or so.
Ramdeo, what are investors saying as possibly the biggest risk to the Indian markets now?
It's just about few hours. I think in one-on-one meetings which are going to happen through the day, and a lot of people, they don't want to speak out here in public in terms of what are the concerns. They are just stunned by the level of outperformance and the way FIs sold out. And I spoke to one or two FIs. They said they are trying to impress upon them that that India's story is different. Don't compare with other emerging markets, and hence their pessimism is unwarranted. That's what they are trying to say. They're all Indians. So I think very specific. I think the only concern I see is the valuation, vis-a-vis the peer emerging markets right now. And we are also defying the US, the broad trend in the global equities, where like other day, last week, we saw about 5% decline in Nasdaq and all, and we were literally flat. So that kind of strength in the Indian stock market, is it warranted? Is it overdone? Only time will tell.
Right, to take that point, only time will tell. But you know, one thing is for sure, Ramdev, and we spoke about this with the management of Indian as well. You are doing this after 2 years in, physically, the conference, and I presume you've paid a lot for the hotel where you are, doing this conference itself. So are you thinking of, recovering this cost by investing in the hotel segment itself, hotel sector?
These are two different, verticals. I mean, there is a sell side which does the conference and they pay for it. This hotel has never been cheap, in the sense that earlier also, at one point of time, for 2 days conference, we used to pay for 4 days. Now I think the rates are up, but I think we are paying for 3 days or so. So that's fine. I think it's a happy situation to be meeting all of them in person, and And yes, there is going to be cost, but that's fine.
Absolutely. I think this was what the industry was craving for over the last 2 to 3 years, right? Meeting people physically, getting back to those corporate travel and meetings, and it's come back in a big way. So great to hear that. Ramdeo, all the best with the conference. Thank you so much for joining us. It's quite noisy out there. So thanks for taking the time out. And amidst all the chaos, we hope to hear from you very soon on the key takeaways from that conference.
Sure. Thank you.
Okay, thanks a lot. That's Ram.